Hello guys. I think it's 11:07 and I see that there is no one watching yet, so we will begin right away with this new session, which is about how trader psychology affects trader performance. Hello wise men, sorry I am around 7 minutes late, always with the software. Okay, so how's going? Hello MC for peace, how are you going? So so the subject of today is so important, and I'm trying always to make it easy for everybody. And what we mean by psychology, we are not speaking about psychology like the behavior of a person or something like that, but we are going to be always specific to trading, because I don't do theory, okay? But everything I do is related to something that affects really the trader. Okay, so we'll try to see. Hello Artkov. So we are like nine people are watching, so it's very good. So when you speak about psychology of the trader, we mean that how he reacts to his trade. Okay, now there is a big difference between a professional trader and a beginner, and this is the difference. It's not that the professional trader has like a strong character or has a high IQ, or he is a sophisticated trader, or he comes from a rich family. No, none of that. Okay, when I explain in this session, you will understand that it is so easy to understand and to change all that. Hello Vincent, how are you? And we have Krishna. How are you, Krishna? So thank you very much for coming. So so as I told you, how a trader reacts to his trade is so important, and this is what makes him a good trader or a bad trader. Another thing that I want to speak about in this session is that as a beginner, there are a lot of weaknesses, psychological weaknesses. Now this is natural for a human being to be scared, okay? To be scared. Now when you do, for example, here is an example. Hello Juan Diaz, hope I pronounced your name very good. So here is an example. When you have a virtual account, it means you are playing safely. It means the money, it's just a fake money. If you win a trade, a very big trade, let's say you have $1 million, you win $100,000 or $50,000 or $1 million, you don't feel it. Okay? Yes, you will be happy a little bit, and you think that you are doing good, but in real, it doesn't affect you that much. Okay, it doesn't affect you that much. It's like you buy in virtual a lottery ticket, and then they told you you won, for example, 100 million or 200 million, like some do, but it was just virtual. Okay, it was in the game, for example. Now, although you seem like you trade well, you do the game well, and you are happy a little bit because you think that you are well, you are good at what you do, a game, for example. But the problem is that it doesn't affect you that much. Okay. Hello, Nasdin Anochi. Hello, Corey. Thank you very much for your presence, and thank you all you guys from the other that they don't use the chat room here, the live chat. Now, as I told you, there is a big difference. So if you are a beginner and you take, for example, a virtual account and you begin to trade, okay, you win or you lose doesn't affect you that much. You don't feel it. Hello, Empty Mind, how are you? Oh yes, Corey Jones. I was just having the thing. The live chat, the live session is just begin, but I click stop because normally my screen shows the green one, so I want to see red button and say stop. I click stop because I am always having a very good reflex on what is green and what is red. So in this Corey, in this session, you will understand why. Okay, because if a trade I see green, I am okay with whatever money I have. Even if I have $1, I see $1, it's green, it's green. Okay? If it is 10,000, 20,000, whatever money I see, like in the trade, I care about to see the green. The green, it means just the green thing because your broker always show you when your account is good, your trades are good, they show in green. But anything that it is red, which is bad. Okay, so that's why, Corey, when I see stop, so I say maybe I am not online or something, I just stop. That's why it was stopped. Okay, so the first beginning that we are talking about is just we talk about virtual and real money. Okay, and we say that virtual, when you do virtual things, you are not affected directly. You can be a little happy, you can be a little sad when you see that you lose, but you tell to yourself it's not real. Even if you lose a lot of money, you say you are confident. You say no, it's just because you understand that it is not real money. This is virtual account. So you see, but when you change to what we call real money, to your account, real money, you begin to have feelings interfering to your trade. Feelings. I will tell you now, just an example. Okay. So just let me drink some coffee. You know, I was sleeping. I just wake up, so I need coffee in order to be up. So here is an example. You buy a stock with whatever money you have. Let's say $5,000, $10,000, $50,000, wherever. Okay. Tomorrow, your stock goes up and you see money. It is in green, okay? Maybe it is, let's say it's your first trade. You have never traded before. You just get, for example, my training, and just you begin to search for a stock. You find a stock, you bought it today. Tomorrow, you will see that it's green. you find $100, $500, $1,000, depending on how much money you put in this trade. So here, what is the feelings that comes to you when you are a beginner? There is not only one feeling. I will explain bit by bit. First, you will be happy to see money on your account. This is the first thing that you get noticed to. It means the thing that you see on your account when it is green, and you go to your chart and you see that the stock is going up. So the first feeling is you are happy. Okay, you are happy. Everybody, beginner and professional trader, when they see money, they are happy. But here is the thing. The beginner, when he got the money and he see the money, he is thinking that maybe the other day, which is the third day, the stock will go down and the market will take his money. So what is the second feeling that he gets? Okay? The second feeling that he gets is he is scared to lose his profits. Now, what do you think a beginner do? A beginner always stop the trade. Okay? Now, why he stopped the trade? He stops the trade because he is scared of the market, that if he stays for tomorrow, the stock will go down. This is why he is scared, although he is happy. So he is happy to take the money. On the other hand, he is scared to lose that profit of one day. Let's say the stock was good in that day. It goes very well. So a beginner, he just begins trading, and then from, like, let's say he got $300 or $500, $1,000, depending on your stock, because there are some stocks, especially when it is a penny stock, you can make a lot of money even in the first day. Okay, you can make $500, $700, $1,000 just to buy today and you sell tomorrow. So the beginner thinks that his money will disappear the other day, the third day. So he is scared of the market. What does he do in order to not to be scared and to continue to be happy? He just goes to his broker account and he sold, or he sells his position, or what he say, he exits the trade, and he will see that his account is in green, and he is happy with that, and he will be waiting for the other day or the other day to do the same trade. Okay, this is the psychology of the trader when he is a beginner. Now, let's go to a professional trader. What does he do when he see the same as what is his psychology? It means how he behaves towards his trade. Now, if he buys as the same as the beginner, next day the stock is going up, he is happy. Happy doesn't mean he is excited. No, he is happy because, okay, his stock is going up. So what is the second behavior that he should do, or what is the action that he should do afterwards? Is he going to exit the trade like the beginner and to take this money? Or is he going to act differently? And this is what I am speaking about how psychology of the trader affect the trader performance. We will speak about performance later. Okay, so let's drink some coffee. You should, all you guys, have something, because it's Sunday night. Have something, drink or coffee or tea or whatever, and watch, because it will be fun. Okay. Hello, Hassan. Thank you very much. Thank you for the free training level. You see, I got a lot of people asking for something which is free, and so I give training level 1 for free. It was just for some people who are following for a long time, and they want just to get this idea of how the training will be. Okay, and that's it. So it's not a big deal. Now, as I told you, the second thing we are speaking about, we are speaking about the professional trader. He buys today, tomorrow there is money, he will be happy. He is a human. You know, all of us, we are human. We are happy when things good comes to us, and we are like sad when something bad happens to us, or happen to our relatives or parents or kids or whatever. So this is nature of a human being. Okay, and but there is something that you can develop, a good behavior you can develop, which is against your natural psychological feeling. Now, this is what we are talking about. So, the professional trader, he sees profit, second day, he is happy, but what is his action? This is automatic. He doesn't think about it, because he has traded thousands of stocks. So it becomes like a routine. It's not he is very excited or very happy. It's just a routine. Okay? So what does he do? He leaves the stock for the other days, because he's right. Now when you buy a stock and the next day you make money the next day, this is a swing trading. This is not a day trading where in the day, in the morning you buy stock, you sell it. This is what you do because you are relying on what we call daily fluctuations. This is correct. This is good. We can speak about day trader later, but we continue with swing trading. Now, why a professional trader has a different behavior toward his trade? This because he is disciplined. He has trained himself for many months or many years to be disciplined and to do the right thing on the right moment. This is something that you acquire. Okay? You should acquire this. It is a skill. It's not something that comes that comes with just in general behavior, what all the people do. So the beginners, most of them, if I tell you not all of them, will do the same thing, because they are not trained to accept rules. Okay, they are not trained, they are not disciplined. They let their feelings go through their business, through their trade, and then they act because they are scared of the market, not because they are good trader. They are scared. Now, a professional trader is not scared of the market because he has an extensive experience, and he is disciplined to do anything that it is good on the right moment. He will not postpone things. This is what we call business. Okay? Business is to do the right thing on the right moment. You don't leave the work of today to tomorrow. Okay? That's you can succeed if you do that. Okay, you are working in a company, and then in the morning you wake up and you don't feel that you want to go to work, so you call out and you you don't go to work. This is not good business. This will lead to problems to you. Okay, now, so we stop here, and we have seen the first psychological thing or feeling that affect the trader, which is the expectation. What to do in certain situation. So a beginner behaves differently from a professional trader. Now, what is the reason? Why? Why he is scared? Okay, we say he is scared because he thinks that the market will go down. Why he doesn't think that the market will go up? Why he has this pessimistic view about the market? It is because of his psychological weakness. It means he is weak. He doesn't understand how the market moves. He doesn't know how to be disciplined. What to do in any situation. You should know what to do toward this situation. You should know. Okay, and this is what makes the difference between a professional trader and a beginner. Okay, now we will speak about the opposite side. Okay, when someone buys a stock and the stock goes down, we will see this right now. Please, since I am speaking, if you see that you have question, or you feel you have a different point of view and you think there is something, please just share it with me on the chat room, and I will answer that question if you have question. Now, the second thing that I want to speak about is the opposite side. Let's say a beginner buys a stock, $20 for example. That is an example. Tomorrow the stock goes down to 19. Now, the first thing that you can see is that the beginner is sad because he sees that when he goes to his account, he sees that $100, $200 or $300, whatever is your position, and he see some money will be taken from his account. Okay, the first thing, he is sad. You know, this is the thing that comes to anyone. Okay, in general, but I will speak that professional trader is different. So a beginner is sad at first. Now, how he reacts to this loss? Okay, how he reacts? Well, what's the thing that he does towards this loss? First, he thinks that the stock will go up in the future. Okay, so he is optimistic about the market, which is the opposite that what the market says. The market says that the market is going down because it is red. No, it can happen whatever it happens. The stock can go up, can go down, always. This is a probability that it is 50-50. Always. Don't make any rule. This is the rule. A stock can go 50% up or 50% down, or it stays where it is. So this is a probability that it is always 100%. It's always. There is no other thing. Either the market go up or go down in any day of the month, of the day, of the week. It's always the same, and it will never change from the beginning of the stock market beginning in the 15th century in Amsterdam, okay, in Europe, when the first they say the first stock market begins with 2 stocks. It's the same thing. Until now, it's the same thing. So the beginner is optimistic that the stock, if the stock goes down, it will go up. This idea is false by itself. Okay? So being optimistic when you see that your stock, that you are losing money, this is not a good thing to do. Okay? And since most of the guys, they don't use a stop loss, it means they don't calculate the risk. So you find the beginner, before he begins the trade, he wants this idea that he has always in his mind. He says, let's buy this stock and see tomorrow what will happen. This is the general idea that a beginner begins with, and this is how he begins. This is how he starts his business. Okay? It's like you, for example, you have some kind of money. Okay, let's say you have 50,000 or 100,000. You save a lot of money, and you have a job. Okay, you are okay. But since this money stays in the bank, you want to do an investment, to do a business. But you have no skill to do any business. You don't have any skill. So you say, let's just start a restaurant and see what will happen in the future. Maybe I succeed. Now, doing this, it means behaving like this. It means that you have no idea what you are doing, and this is a big risk for your investment. Okay? So, as I told you, the trader, even he sees that the stock is going down, he is losing money in the second day. I'm always speaking about the second day. I'm not speaking about the other days. And he is optimistic that the stock will go up. Okay? We will continue this behavior later. Now, if you take, for example, the professional trader, the opposite, what does the opposite or the professional trader do in this situation? Okay? First, as a professional trader, the first thing you do before even you buy a stock is you make a plan. Now, the beginner doesn't make any plan. Okay? Maybe you are sitting and your friend, you have some friends or chat room or Facebook or Twitter or whatever you are hanging in. Most of the time is Facebook. You find a group or you find a person that you are following or whatever is your while you take from your information, or from TV. Okay, from TV or from any website, you just get a stock and you buy it, and you say, let's see tomorrow what this stock will do. This is the beginning of your business, which is not true. Now, a professional trader, when he buys a stock, it goes down. Although when it goes down, he doesn't become like sad, like happy and sad. No, he sees this as normal thing. What does it mean normal? It means he accepts the loss easily and he doesn't argue with the market. This is one of the skills that you should train yourself to do in order to be disciplined. Okay? You should not argue with the market. You say, why this stock goes down today? It was yesterday it was going up. So you are arguing with the market and understand that the market is neutral. The market, what is it? We have millions of traders, big guys, small guys, institutions, brokers, or you have, let's say, 1 million of people, businesses, and they buy and sell stocks. So it is not someone that you can address to or you call, or there is no. It's just something general. So when the stock goes down, first he has a stop loss. So what stop loss does, it controls your risk. When you are doing business, you should control your risk. You should know what you are doing. You shouldn't leave the trade like this. A lot of people, there is one guy who sent me an email just to clarify these problems that beginners do. He buys a stock. The next day, maybe there is earning news. He has a gap down. Okay. Now, when he has a gap down, he lost some money. He shoot me an email, and he says this. He said, Kareem, I bought a stock, there is a gap down, I lost money, what should I do now? Okay? What should I do now? And I told him the first thing, you should not ask me. Why? Because if you put stop loss and there's a gap down, you have already been out. So you exit the trade without asking me. So I told him, I conclude that you did not put stop loss. He told me, yes, I did not put stop loss. I asked him why. Okay? This is the first problem. The trader buys a stock, he doesn't want to control his loss. Even I understand that stop loss doesn't work with the gap up or gap down. I know, especially gap down when you buy long. I understand, but at least it's automatic. This is the good thing. You don't feel it. It's over. You are out. You don't have to think again. And this is, as Hassan says, plan your trade and trade your plan. This statement, it is one of the I think one of the Wall Street adage or statement. Plan your trade and trade your plan. It means don't play with your plan. You should make a plan and stick to it. It's like when you want to build a house. Okay, you have a plan, and you should make the plan. Okay, in order to build this house, not each day or two you change this plan. Okay, you shouldn't change the plan for the trade. Now, this is what happened. It means you don't want to be disciplined. You want things just go like this. You buy a stock, leave it. Okay? It go up, it go down, it doesn't matter. If it goes up, you are happy, you just exit very quick. But if the stock goes down, you will be waiting for it until it goes up. Now, The question is, what if the stock doesn't go up? For 6 months, for 1 year, for 10 years, it doesn't go up where it was. And this is true. There are thousands of stocks in the market that when they go down, they will never go up. They go companies that go bankrupt. Okay? And you here, you are doing swing trading. You are not doing investing, because investing, it is something else. We are not doing investing here. We are doing just trading, which is a swing trading, which is just we stay enough to make money and then we exit. We are not staying years like investing. So as I told you, a professional trader, when the stock goes down, it's okay. He accepts what the market gives. Okay? And he knows that the stop loss will do the job for him. He has already planned. He doesn't need to change his opinion. Okay? And some exceptions, we will talk about these exceptions later. So you understand that here the psychology of a beginner is different from a psychology of a professional trader. And this is what makes them different, and this is why the beginner loses money, and this is the other why the professional trader makes money. Okay? It is just because of the psychology of the person that controls his feelings. One is loose, he just behaves like naive. He doesn't know what's going on in the market, he's naive. Okay? And the other has experience, he has skills, he is disciplined, he has money, he knows what he's doing, and he should make money. And 99.99 professional trader makes money, 99.99 the other beginner, he loses money. And this is the difference. Hello, Andrea. Andrea, how are you? Vincent asks the question. Let me drink some coffee. Vincent says, when you buy a stock and then a company decides to go private at some point, what will happen to the stock? Yes, this is a good question. It happens to me once. As Vincent says, the same thing. Okay, it's the same thing. This is not bankruptcy. No, it is just the company wants to take all the money that it gets from the market. Okay, let's say the company has 60% of the capitalization of the company. Because understand from the beginning, why a private company, it is successful, it is making money, why it goes public to the stock market? You ask always this question. You say why it doesn't continue? Because it is making money and it is successful. Because most of the companies that they go to stock market are successful. It means they make money and they are known. So the reason for that is that the company wants to raise money for the company. What does they do? By the help of banks and those institutions that let this company go to the stock market. Now this company is divided into shares. Instead, for example, it has only 1 million shares. Okay, let's say the company has 1 million shares and each share is only $1. This is when it was private. It means, let's say a small company, there are 4 guys, okay, they make a company, each one has, like, let's say $250,000, and they make small company with money, $1 million. This is the capitalization before this company goes to public. Now, when they go public, what does it mean? The market gives them, instead of 1 million, let's say 100 million shares. Okay? They make the company bigger, and they sell this 99 million shares in the stock market. Okay? So when they sell, they raise a lot of money. At least, for example, they sell, let's say they sell only 40%, because you know, the company should own more than the market, because if it gives all, they control the company, and the company collapse, and other strangers will come and take over the company. So these people, in order to protect themselves, they don't sell the whole company. They only have at first 1 million. For example, they take 60 million for themselves, 60 million shares, and 40 million they sell. Now, when they go to public, they will sell 40 million and they have 60 million. So the next day, when the market opens with this company, they have $60 million and 40 million. The guys like us, like me, like you, like anyone else, it's become public. Anyone can buy. Mutual funds, anyone can buy this stock. Now, let's say the company, after 10 years, becomes bigger and bigger and bigger, but these guys, they don't want to share this 40 million shares. It was, for example, $1. Now, after 10 years, it is $10. So the company becomes bigger and bigger and bigger. It's a lot of money in the company, in the stock. So the company, for example, they decide, they say, okay, we will go public, and we just give this 40% of shares to the people back, because they invest in our company. But the 60 million, it gets out of the market, and this company will have $60 million. When it enters, not 60 million, it could be 600 million, because you know, from $1 it goes to let's say to $10. It's like 600 million. So the company stops being public. It gets enlisted from the stock market or the exchange, and the people, when they own shares, well, what will happen? The company sell those shares and it gives you your money back. So Vincent, it happens to be the same in the past, where a company it goes private, and I open my account, I don't find the company, you know, because for me, I don't check this company what is doing or whatever, okay? But the stock was strong. Understand that successful companies, they don't go bankrupt. It's only companies that go bankrupt is the companies that you see their stocks going down for a long time, and then one time they disappear. But these companies, there are warnings, there are signs that you can see. So he says, at what price do they buy it back from you? Yes, it's the price of the close of that day. Let's say the close is $20. They give me my money, $20 for each share, whatever shares I bought. And then after a few days, like 10 days or 15 days, because there are a lot of calculations, a lot of stuff, and they give me my money back. It means if in the trade I was making money, they give me the profit, they give me the share as it is. Okay? As it is. I don't know. I have read in one book before that private companies, if their share goes up again, I think you have the option to stay with the company. Okay, but this I have no idea. You should go to your broker, or you should know about this, because I have no idea. Okay, I have no idea because I don't follow these guys. I don't follow. They give me my money back. Because I called my broker and say, what did happen to this company? I say, oh, you don't know? I say, I have no idea. He told me they go private, but your money will be going back and you will receive your money back from the close of that day. I say, okay, I don't have no problem. At least they give me my money back. Either you have a loss in your trade or you have a profit, they give you the same price of the close. So here you don't worry a lot. Vincent, if you have a company like this, don't worry because they will give you. But if this company is going bankrupt, most of the time, 99.99 or 100%, your money is gone. Because bankrupt, what this mean? It means they have no money. They have a lot of loans, a lot of debt. And if they have a debt, they begin with the debt first, the loans that they have. So they sell everything. They sell the stores, they sell whatever the assets they have. Okay? So they sell everything and that's it. So as you can see, the psychology of trader is very, very important. And how the trader behaves toward his trade is very, very important, and that is what makes the difference. You see a lot of people losing money. Why? It's just because they are not disciplined. They have no skills, trading skills. What I mean by trading skills, it means they do things naively. They are not professional. They have no skills. They don't get training. It means there are a lot of trouble they get, and they are like they have what you call primitive thinking. Okay? Primitive thinking. It means you are so naive. It means in life you don't think about the future. You don't plan what you want to do. You are just going with the wind, as they say, with the crowd. Okay, the crowd go west, you go west. The crowd or the people go east, you go east, north or south. So you just follow. You don't have an opinion. You don't know what you are doing, and that's why when the people they get bad luck, or what they say, bad luck. You get bad luck with them because you are not different. You are the same as those people. Now, let's talk right now. At first, when the stock is going up the next day, I said that the beginner, he exits the trade. What does it mean he exits? It means he takes little profit and he exits. Let's say in this trade, next day the stock goes $2 and he make $200. Let's say he bought 100 shares. He got $200 in this trade. As you might think, you think that $200 is too much because the beginner, he has never seen this money coming for easy money. This is what they say. You say, man, I just bought this stock today. Tomorrow I find in the morning that I have $200. This is magic. So I want to take this money. This is what they think. Okay? So they stop their profit by themselves. Now, has the market showed you that he is not giving any money anymore? No, because you don't know. Okay? So you stay with this idea that you should take money out of the market. And They have this. I have seen someone commenting on the channel, and he says that one of the biggest traders in the world, someone I don't know even his name, he says it's not harm to take some of your profits. Okay. Now this guy, the people, they don't understand what this guy is saying. He's saying if you stay with the trade a long time and you make a lot of money, it's good maybe to take half if you have made a lot of money, but you just begin. Okay, there is a big difference between when you begin just to trade and when you have 1 month or 2 months, 6 months, and you accumulate a lot of money. Okay, so that's one of the weaknesses that these beginners say. There are a lot of weaknesses I will speak about right now, and there are bad ideas that the people have, and they apply them, and it will not help them make money. It helps them lose their profit, and we'll get to that. Okay, so let's see what Vincent has said, and then we can continue the thing. So Vincent has said, what about a professional that buy a lot of shares, and instead of getting 100 or 200, he get 1,000, 2,000, and want to exit because that is good profit for him? Is that also a mistake? Yes, this is a good question. Okay, from Vincent. I will repeat the question. Just a moment. Just for you guys, I repeat the question, and then I can answer it. He says, what about a professional that buy a lot of shares, and is instead of getting $100, $200, he gets $1,000 or $2,000 and wants to exit because that is good profit to him, for him? Is that also a mistake? Yes, it is a mistake. I will explain this when we go to the professional trader. I will mention the answer to your question. But let me continue with the beginner and how he makes a mistake because he is scared of the market. What does he do the second day? Because the beginner, the problem that he is right with the market. It means when you buy a stock, tomorrow the stock goes up. What does it mean for you? You are right with the market. It means you are right with the market trend. You are okay. So why you want to exit the trade when you are good? And he says that he is scared. He sold his shares. He gets his money. Okay? That's it for him. Now, some other beginners, they do another mistake, which is the second day, for example, they sell half of their shares. Let's say they get $200. The next day they sell half and they get $100. And they leave 50 shares, okay, for the next day, the third day. And maybe if they have good, they will sell. So it means they have this idea to stop their profit because they are so scared of the market. Now I have another thing to tell you, that someone has sent me an email also. Okay, and I see a lot of comments like this. He says that you should take your profit at 10%. this is just an example, okay? I will just explain. And I asked this guy, and they told him, okay, who tells you that the market or that the stock will stop at 10%? Who? He told me there is a guru, or there is a famous trader, or he has read this in a book, or he has seen it in the major channels, business channels, and he says that okay, you should stop your at 10%. It's good because if each time you get 10%, 10%, 10%, this is very good. But this is not true. Now, why it is not true? Why this idea is false? Because here I'm trying always to explain to you that the ideas that you get from books, from groups, Facebook groups, or whatever you go in order to get your information, there are some ideas that are false, and if you apply them into your account, and because of your psychology, you follow them, and then you make mistakes, and then you lose money. You ask me, for example, the question: why someone gets 10%, he loses money? What's the he is making money 10%? Why you say it is he is losing money? I will answer you. It's very simple. What if this stock goes like my stock, the live trade that I have done? Okay? My stock goes 59% in 5 months and 2 weeks. Okay? 5 months, 2 weeks, my stock go 59%. Now, if I exit at 10%, how much I lost from my profits? I lost 49%. Oh no, what is it? 10? Yes, I will lose 49% if I exit at 10%. Do you understand that? This is why it is a mistake. Now, let's go to the professional trader, and we speak about the example that Vincent gives us. He says, for example, a professional trader, he has a big account, and he bought a stock, a big position. Let's say it's not a big position, but it's a position. And then the next day he gets $1,000 or $2,000. If he exits, is it a mistake? Yes or no? Okay, let's try to explain this. I say it is the same mistake. Now, why it is the same mistake? It is because since he has a big position, this 1,000 or 2,000, it's a small percentage from his money. Let's say this $1,000 is only 5% of the trade. Okay, 5% of the trade. It's like you put, let's say, I think I don't calculate well, but if it is like $50,000, you put it in the trade. The next day, let's say you get $1,000. Now, which is I think 2%. Yes, 2%. This 1,000, 2,000, you should know compared to what? Okay? Compared to what? if you put 100,000 and next day you get 1,000 or 2,000, are you going to take this a small money or little money? The idea behind whatever money you get, you should hold your stock. This is the reason why you follow the trend. Because for you, if you want just to make little money, you can do day trading. Okay? Day trading, because you do the trade, you use a lot of money, all your money or half your money, and you make 100 or 200 or 1,000 or whatever your money because of your trade. That's it. But understand that this is the problem. Swing trading is to follow trends. It's not to follow little money. Here yes, Vincent, he gave me another information. He says, for example, let's say he has $10,000 and he gets 1,000 or 2,000. Now here, hello Miniapan, Mini, hello. So here, if he has 1,000 or 2,000 of profit, we try to see if it is normal days or is it a gap up or gap down. Here is the difference. Now, if it is a gap up, okay, it is something else. For me, I always exit in the gap up, because most of the time the short sellers go down and they fill the gap. This is another thing. We are not talking here about gap ups or gap downs. So understand, Vincent, if it is normal trade, the second day, you should wait, because you are doing a swing trading. You are following the trend. Okay? So you are not doing a day by day trade. You are doing a swing trade. It means, what does it mean, a swing trade? Swing trading, it means to follow a trend until it dries up. You follow the trend until it stops. And Vincent, I know, I think you have my training level 7, or my subscription. If you go to my trade, you will see that I stayed 5 months and 2 weeks. I'm getting 59%. So is this is only if you get 10% or 20%. Understand, what is it? Is it a gap up? Yes, maybe. When there is a gap up, it is something special. It is an exception. Okay? Gap up, it's something that you get a lot of money in a very shorter time. It means you buy today, tomorrow you have a gap up. I have told you before that Vincent, one time I bought a stock which is called ANAC, NAC, which is in drugs sector. I bought it 78. The next day it is 135. Okay, it's a big money. My money has nearly doubled. Okay, and this you have many ways to do it. Either you can sell everything, or you can sell half and you put stop loss, or you can put stop loss and you leave it. If it continues to go up, you will be making more money. So there are a lot of techniques you can do. But for here, I'm not speaking about techniques about gap apps. Gap apps are special. That's why I don't want to talk to them right now. Okay, we are talking only talking now about the normal trend that you follow. Okay, so we have another question from Hassan. Hassan, he says, you should not look at the money you earned. You should only exit according to the rules. Yes, Hassan understood the thing. You should follow the rules. Okay, if someone each day gives you money, okay, he tells you each day I will give you money until I tell you that I will not give you money and I will stop. Okay, so each day when you are when you are in a trend, is each day you are getting money, another day getting money, another day getting money. You are getting money each day. So why you want to exit? Okay, why you want to very quickly exit the trade in order to take little money and then you exit at all and you find another stock? Okay, so when the stock is moving up, okay, we try to put a stop loss. It's not a stop loss, it is the exit price, because it's not called anymore stop loss. It is the exit price, and you put it in certain rules, and when the trend has finished giving us money, you exit. And it happens with the trade that I have, live trade, that I stayed 5 months and 2 weeks. Now staying that period is a long period, but as you can see, I succeeded to stay more, and the success when you stay more, I'm getting more money. And this is the most important thing that you should, when you apply good rules and good techniques. And this is the aim of swing trading, is to stay longer. We are not staying years in the trade. Understand that. We are not staying years, because this is called investing. So we are staying until we get enough money, until the trend dries up. If the trend is still going up, we should never exit the trade. This is the rule. That's why here I'm teaching you the rules that you should apply. I'm not teaching you just to be getting whatever money in 1 day or two and then exit, because you will never make money at the end of the year. That's my we will be telling you this at the end. Yes, as Hassan said, it has to do with fear of losing your profit. This is a weakness. That's why Vincent, I'm trying to tell you that this is a weakness, because you feel that the market might go down. So you are pessimistic. Although you just begin the trade and you make money. You should be the opposite. You should be optimistic. Okay? So that's the thing I'm speaking about. So Hassan said it's better not to look at your broker account if you have problems controlling your emotions. Oh no. if you can't control your emotions, it's very hard to make the money, and you will be losing money instead of making money. So you should always take a look at your account and see what's wrong. So not opening your account, not signing in your account because your trade is doing bad, this is too bad. You should do something. Okay, it's like an emergency. You should do something. You shouldn't just leave the stocks like this, and then you have the feeling, I say, oh, the stocks go down, let's do investing. I will not open my account until 6 months or 1 year, and then see what will happen. This is not a business. This is not trading. And if you continue like this, you will be heading to a catastrophe, and you will lose all your money because of ignorance, and because of these psychological feelings that we are speaking tonight. Okay, so the best thing to do is to to be disciplined. In order to be disciplined, you should train yourself to have good techniques and apply them, and always make a plan to your trade. And this is what you should do in the whole trades the whole year. Hello, King of Calm. Thank you very much for coming. Let's drink some coffee and see what's his question. So King of Calm, what is he says? He said market makers know where the major support lines are and we run the price down to below out all the stops. But this, see, market makers, they are not here to go after you, okay? This is automatic. What they do, market makers, is automatic things. They match sellers with buyers. They don't have time to see anything, okay? So, if you don't believe what I say, I have a trade. Since you just come, I don't know if you have seen my trade or not. I stayed 5 months, 2 weeks, 5 months and 2 weeks in a trade where I change my stop loss each week or each 2 weeks, and I have never been out. Okay? So this doesn't mean that you put it in support lines out, up a support line, or above or below. This is not always true. So it's your techniques. It's your techniques that you used that makes the difference. Don't think about the market makers and try to see that these people are after you. They don't know you. They will never see where you are. Okay? So when there is a sell-off and there is one guy who is big who is buying, yes, the sell-off takes the price down. This is automatic. They have no clue. They just match things, and if things are going down because there is a lot of sale of shares, the stock, it goes wherever it goes. It has nothing to do with only support lines above the support line, or the day low, or 2 days low, or 3 days low, or 6 days low. It has nothing to do with that, because sometimes you see that the stock goes down a lot. Even there is no support line, there is nothing. It goes a lot down and it goes up again. It's just because of two forces. One, someone, it should be big, is selling the stock. It's just a big sell-off. Now when this big sell-off is going down, and short sellers, they come to help him go down and down and down to make money. And then there are some people see an opportunity to buy from the bottom, or there is a mutual fund manager, or there is anything that it is big. He begin to buy these lows very, very quick, and he put a lot of orders to buy. The stock goes up so good until it reaches maybe the beginning of the day. So this has nothing to do with support lines or resistance line, or whatever line that you are talking about. Okay? Market makers, there are thousands of market makers. There is no only one, so they can't go together and think the same. No, they are doing business. Market makers, how do they make their money? Is from the bid and the ask. They buy, they sell, they buy, they sell, they buy, they sell. It means they match sellers with buyers, and the spread is what they get. That is the job of market makers, because they make the market. They try to help the market move. I want to buy, someone wants to sell. So they match us, and everyone is happy. The seller is happy to sell, and the buyer is happy to buy. Okay? So that's the thing. So King of Calm, if you have seen my trade 5 months and 2 weeks, and you see how I move the stop loss, you will understand what I'm talking about. I got 59% of that trade, and if you see the trade, maybe maybe you or someone else, you will do the opposite. If you do the opposite, you exit early. You will never get 59%. But when I exit, the stock have go down and have a gap down and it's going down. So it means that I am right 100% when I exit. And this you can see live. I'm not saying just I give you the chart and they say buy here, go here, change here and sell here. No, this is live. I do a video each week and you see why I change stop loss, why I don't change, what should I do, what is my reasons, and I continue with the trade for 5 months or 2 weeks. So understand that it is a real thing. It's not just to play like this. So in general, when you are doing swing trading or day trading, don't blame others for your mistakes. Okay? If you lose money, you see my broker has done this. It's the market who has done this. It's the market makers who have done this. It's the mutual fund who has sold millions of shares, that's why I lose. No, it's not like this. It's not like this. It is you that you do a mistake, not somebody else. So when you begin to learn the right way, you will avoid all these mistakes and you correct them. And this is how you build your confidence to be an independent trader. You know what you are doing from the beginning to the end. Whatever situation, you find answer. Because sometimes it is very difficult to make a decision, but you should make decisions each step when you are doing the trades. Now, so we begin with the beginning. When the beginner buys a stock, the next day it goes up. He wants to exit early. Let's say he gets $200. Let's say a professional trader is does the same trade. The second day he gets $200. Let's say they have the same money. Okay, not to give you an excuse to tell me, oh no, this professional trader has a lot of money. Okay, this beginner has a lot of money. There are some people who are rich. They have a lot of money, but they don't know how to trade. Okay, so they do mistakes, big mistakes, and they lose a lot of money. Hello, Beef Daddy. Okay, I will. Since you are speaking about day trading, I will continue what I'm saying, and then I will come to you back. Okay, so these two traders, one is beginner, the other is professional trader. They buy the same stock with the same money. Next day, they get each one of them $200 because they do the same trade. Now, the beginner stops the trade. He sold all his shares, he exits the trade, he has $200 and his account is green. That's good. Okay. Professional trader, he stayed 1 month. Okay. Instead of getting $200, he's getting $2,000. It's just normal. It just stays until the stock gives him money. So, although the beginner has a winner trade and the professional trader has a winner trade, but what is the difference? Who makes the money most? Is the professional trader, because he stays. It's not a random thing. It's not by magic. It is not by luck. It is not by hope. No, the professional trader, he doesn't hope. He stays and he follow the trend, and he changes his stop loss until he finds $2,000, and then it hits his stop loss or exit price, and he exits with $2,000. It's a lot of work. It's not he hopes that the market will be good for him. So understand that it is work. It's not just like a pure lack or hope. This is what I want to make sure from the beginning. Okay? Don't say, oh, professional traders are lucky. They always make money. No, they are not. They are not lucky. They do it because they know the business. They have a plan. They follow the plan. They have rules. They have techniques that are superior than the what we call the beginners. Now, let's have the question of Piff Daddy, and then we can go and explain the other thing when the stock is going down. Okay? Let's drink some coffee. So Piff Daddy says, I was wondering how you trade the crazy opens lately. First, Piff Daddy, I don't do day trading that much. I can do it once in a year or two, twice or thrice. I am not a day trader. I was before, but I don't do anymore. The reason for that, I am making more money from swing trading because I work less and I have more money. Okay? I don't do day trading. This is the first thing. You said sometimes I will see futures creeping up, then quick drop at open, only to open green. I have saved myself a lot from canceling stops in bulls. Man, see, this idea of a bull and a bear, you are mistaken in it. Okay? This is just a general word. It doesn't mean nothing. Futures, they can go one day up and they can go the other day down. So don't speak about bulls. Bulls, it means, in general, it means when the whole market is moving up so fast. 1 year, 2 years, 3 years, very, very good. But here is the problem. Not all the stocks go up. There are some stocks that go down, and it's not all the stocks. If it is all the stocks, it will be easy just to see an index, and all the stocks are the same, and that's it. So stop using this idea of bulls and bears. Okay? For me, when I trade, I see the trend. I am not a day trader. I don't see the day fluctuations. I don't care about them. I see the long trend. This is one thing. And you say, I have saved myself a lot of cancellations stops in bull. Now, since the stock is going up, why you are thinking about canceling stops? Stops, they are under your price. Okay? But if you play the fool and you don't put stop loss in the future, don't tell me you will be in a debt maybe and you will have a problem. Futures are they move so because they are leveraged. Okay, it's like options, they are leveraged. If you can make a good trade, you can make a lot of money from one trade, from one contract. You can make a lot of money. Okay? But if you leave this contract by itself, there is no stop loss, and it's going down, you will lose your shirt. I hope you understand what I'm saying. Okay? So, it's like a currency, it's like options, it's like futures. There is a lot of... You should always protect yourself and don't play with the match, except when you are in the trade. And you are following the trade minute by minute, and when you want to exit, you just exit the trade with a market order. That's the thing I think you are speaking about. But for me, you don't open a position and then put stop loss and then leave it for days without controlling it, because futures, is very leveraged, and you can lose a lot of money if the stock goes down. Hope you understand what I am saying, but understand that for us, we are doing swing trading, we are following trends. You can do that with the futures, but it is so dangerous. Okay, that's why the people, they do day trading. They don't do most of the time. You can do swing trading, but you should be sophisticated, and you should have high command, and you understand very well futures. Okay, you should understand very well. It's a big game. Now, Hassan says professional let his winner run and stops his losers. Beginners does the opposite. Yes, this is in general the conclusion about how a beginner do and how the professional do. Okay, so let's drink some coffee and then continue the next step. When things go down, how the beginner and professional trader behave, because all is related to psychology. Okay, let's say this is the first trade. Both of them were winners. I told you that a professional trader, he got $2,000 because he stays more, and the other one, who is a beginner, he gets $200 as profit. Although it is a profit, I'm not saying it's not profit, but you will see the problem when they go to the next step. Let's say the beginner and the professional, they buy another stock. This is another stock, okay? $20. The next day, the stock goes down. By the end of the day, the professional trader, he got a loss of 200, and the beginners, he gets a loss of 200. Hello, Pablo, how are you? Now, we say 200 and 200. Both of them, they get a loss. How do they behave to this loss? Let's say the professional trader, he put a stop loss at this $200. It means whatever is the price, $200. He exits the trade. Now, how much he lost? $200. In his account, how much money he get now after these two trades? Okay? He gets $1,800, and he is always in green. Okay? He's still making money, although he lost this trade. 1,800. He has 2,000 before the first trade. Now he has 1,800. But he is good. Let's go to the beginner. He lost 200, and because he has an optimistic view that he says to himself that all the stocks, when they go down, they will go up. He doesn't want to exit the trade because he thinks that the stock will go up. Okay? After a few days, the stock, he lost, let's say, $600. Just an example, okay? So we said that the professional trader, he lost $200. He exited the trade. He's all set. It means he exited the trade, that's it. The beginner stays. After a few days, he lost $600. And then he begins to feel the pain. He knows that he is wrong, but he is stubborn. He thinks, no, I am not wrong. It's the market who is wrong. The market will go up. It means he wants to, he has an illusion, or a delusion, as they say. Okay? He thinks that the market will go up, and he he's confirmed, and he is stubborn. This is one of the problems of beginners, is stubbornness. It means someone who's stubborn, he's ignorant, he thinks that he is right, although the market says to you, you are wrong. There is another idea that I want to tell you, which is a very funny idea. Hope you understand this. Now, what is this idea? Someone told me before, one of these guys, he told me, if you don't exit the trade, you don't have a loss. It's unrealized loss. You see this idea? How destructive is this idea for the person? Saying that if I don't exit the trade, it means I have no loss. Is that true? No. You see that you have $600 loss. How can this is not a loss? Now let's say after a few days, beginners, what they do, they stay, but they realize that they are wrong. They feel the pain. This is a psychological pain when you have an idea, you know that it is false, but you are stubborn to stick to it, and then you realize that you are wrong, and you are losing more and more money. Okay? Then what you do, when you feel pain, you go to your account and you sell. You exit the position. Okay? Because you have a lot of pain and you see that $600 you lost. Now to his account. Is he making money? Yes or no? We say that he has made $200 on the first trade. 600 loss in the second trade. How much he made? He lost $400. Now, by this, I conclude that professional trader has 1,800. He is green. He's making money. And the beginner, he has a loss of $400. And that's it. When you want to analyze why do we have this two kind of traders? Why the beginner doesn't be disciplined as the first trader, as the professional trader, and he makes money as he does? Hello, incredible product. This is a long time I haven't seen you. Like Pablo, like incredible product. Okay? So you ask yourself, why a beginner doesn't make money? You are in the same trade like a professional trader, but you lose money and the other guy is making money. What's the reason? The reason is that this has to do with the psychology of the trader, has to do with the discipline, has to do how to behave in terms of winning a trade or losing a trade. Okay? What is your expectations? Are you hoping that the market goes good for you, or are you trading really the market with whatever it comes with? Okay? So this is generally the major weaknesses of the beginner, and how the professional trader is always good compared to a beginner. As Incredible says, product difference is beginners have emotions and no plan. Yes, it means if you begin to make a trade, you don't know what price you buy, you don't know what signal you buy, or just you buy like this. You don't make a plan. You don't know how much risk you risk in this trade. You don't have stop loss. You have nothing. You just trade like blindly like this, just buy and sell, because the beginners, what they do, they have this excitement and routine the whole year, buy and sell, but they don't see if they are making money or yes or no. They are not aware of their trading transactions. They have no idea about anything. because for them it is just like an excitement. Okay, doing an excitement, it means just buying and selling, and this is fed by ideas from the books or from the market or from television about TVs. It means any website, and they just take techniques here from there, they apply them, they lose. When they see a good trade, they exit very quickly. It means all these problems that they have, mostly or most of them are psychological, and this can lead to losing all your money if you are not aware of what you are doing. Okay, so I think we are at the end of this session. I think I have finished what I want to say about psychology. And if you have more questions, please ask, because I will continue with a lot of with some stuff related to psychology of the trader. So please, if you have questions related to this, or you don't understand something that we have done, you can just ask questions until I will speak more about other things. So when we say, as I told you, psychology of trader, we have a lot of things to speak about beginner and professional trader, and in order to have discipline and to delete all these psychological weakness that maybe you face, okay, so the best thing is to be disciplined. To be disciplined, it means you should learn more in order to be disciplined, because discipline is a state of mind. It has a relation with psychology. Okay, it's like when you make the plan of the day or of the week and you apply what you do. Okay, let's say you go to the gym 3 times a week, you go hiking, you read a book each week or 2, you go to work, you do this, you do that. It means we have a routine, that it is a healthy routine. It means you are doing the right thing for you. Okay, it's not something at hope. You hope things come good for you, and you buy a stock, you hope that it will go up, and you hope, and you buy a ticket, a lottery ticket, you think that maybe one day you can be a millionaire, and this is life. And you have a small job, you continue with this small job all your life, and you think that your employer will give you more money doing small job. Okay, so all this has a relation with psychology of the trader. It means your psychology. Is it good? Is it bad? Are you planned? Are you disciplined? Do you make plans or no? So let's see. Well, wise man, what he says? He says lots of beginners have small account, so they let their emotions take over lots of their trades. Yes, smaller accounts have other problems, because sometimes a beginner, I'm not speaking here about you have small account or no, but psychology. Sometimes you get angry against the market. You think that the market is an enemy. What do? You do a trade and you lose money. You want to trade again, especially when you are doing day trading. Okay? And you begin just being angry and trading again. This trading fever makes you lose a lot from commissions. You are troubled. You don't think well when to buy, when to sell. You don't plan very good. All this makes it very hard to make money in the market. So the market is neutral. Neutral, what does it mean? It means it is not with you, it is not against you. It is you who buy the stock. It's not the market who chooses the stock for you. If let's say the market send you a stock to buy and then you lose money and you can ask the market, you say, the market, you are wrong. You give me the wrong stock. But it is you who choose the stock. So don't blame anyone, blame only yourself. Empty Mind say, why beginner want to win every trade? Yes, this is a good question from Empty Mind. He say, why beginners want to win every trade? Because this is what their education is about. It means some people online, they told them that we have 100 trades, 100% winners, or a high percentage of trades, 75%, 95%. But understand that this is a false concept. I have explained this in training level 5, if you can remember. For those, all of you guys who have my training, they understand this. It means it is not the number of winners that makes you a winner. It's not. There are other concepts that you should study. I have only one concept that will change your mind about how to trade. So for those guys who are new, I don't know. So it is training level 5. How to make money from stocks. Okay. I think all of you guys have this training because you are my students. Some of the guys who are not my students, they don't know about it. So I will get this for them. So maybe they will check it later, either as an ebook or as an okay. Let's see here. No. Let's see, I do mistake. Let's see. Okay. It's training level 5, how to make money from stocks. Here is my website, Djellala.net, and my email if you need private. If you have a question after we finish this session, you can send me an email and I can explain to you. You can buy this by email, by videos, or by ebook, and there is a huge percentage when you go to the website. You see it. Okay, so as I told you, the beginners, as I told you, they have false ideas from the either social media or from books. They say you can, in each trade you can make money. There is no trade where we don't make money. We have a system, we have strategy, we have a trading software that makes you all. It's proven. There is no, and it doesn't exist. And if you follow these guys, you lose all your money. Especially those who use trading software and they think that the machine can make money by itself. If it is the case, no one who loses them. Okay, if all the people use machines, it's the machines that they fight to each other. Okay, now Empty Mind, as I told you, there is a new concept. It's called how to make money from stocks. This concept gives you the real thing in trading. So the number of winners versus losers is not a guarantee that you make you money. Okay, there is no guarantee. Even if someone says to you 75% are winners in his strategy or whatever, he doesn't know. When he speaks about percentage, understand that this guy has no idea, and maybe he doesn't trade, because in real it's not this that govern the winners from losers. It's not this idea. So you can just get checked. Hassan said revenge trading when you lose. Yes, some people they do revenge trading. It doesn't mean, see, there is a difference. A professional trader, when he loses a trade, he do another trade, but this is not revenge. This is something routine. This is normal. You lose, you win, you lose, win, you lose, win. But at the end of the year, you make money. But a beginner, his way of buying stocks will accelerate. He will buy and sell, buy and sell, buy and sell. He doesn't, because he wants his money back from the market. And he thinks that the market is an enemy. As I told you before, a market is not an enemy. The market is only a neutral place where people buy and sell. If you are in a good stock, you will make money. If you are in a bad stock, you lose money. That's it. There is no other thing you can think of. Hassan said, especially in day trading. Yes, in day trading, most of the people, when they lose a lot. Incredible Product says there are a lot of lies online on taking small account to millions of dollars. Yes, unfortunately, this is true, and people, you know, they continue dreaming. It's like the same with lottery ticket that you buy each day $10 like tickets, and you are waiting for millions of dollars, and you spend 60 years, 70 years until you die, and you are still trying to have these millions, okay, as a jackpot, like they say. But you know, the odds are against you, and the chance to make a good jackpot is 1 out of millions or billions of chances. So it's so hard. Okay, so that's it. It means this is what makes the difference between a good trader and a bad trader. But in order that people change from being beginner to advanced trader or intermediate to advanced, they should practice. They should make a plan for each trade. They should be disciplined, and they should always look what's wrong in their account. If there are mistakes, they should correct them. Now it's very good that I am here. If someone has something that he doesn't understand, or he has doubts why he loses money in this trade, although the stock maybe it goes up again and it makes money. So all these questions, you can, as you can see, you have my email, and you can send me an email, and I can help you at least understand these things. But as I told you before, you should always work on this thing and raise your capital. It means save more money for your capital. Don't leave your capital small. Try to make it bigger and bigger and bigger by saving and trading. Because here is the thing. When you know how to trade, the only problem that faces you, what is it? It is you don't have enough money to buy what you want. Although it seems that strange. It seems strange for you, but this is the real thing. When you get to that level, you begin to understand that. I will give you a simple example. Okay, my examples are real thing. It happens and it will happen, and you can see it. Okay, let's say a small trader has $10,000 and bigger account like 100,000. Just I say bigger, it doesn't mean that it is big, but it is just bigger than 10,000. Let's say it is 100,000. Let's say they do the same trades, and at the end of the year they have 50% profit, which is 50%, which is big, which is so good. Now, at the end of the year, who makes more money? The trader who has 10,000, or the account who has $100,000. Okay, so the beginner, although he has made 50%, he will make $5,000 for the year. The other account, which is 100, he made $50,000. $50,000 is big money. Okay, it can cover all your life expenses in the year. For some people who are general people, I'm not speaking about high class or middle class or okay, I'm speaking about general people, common people. 50,000 is a lot of money, but 5,000 is small for the whole year. So that's why what I'm telling you is that the amount of money you have has a very big impact on your account. Okay, so do it as the other people who are doing 401k for investment. You can make your trade account like this. You can save more money, make it bigger and bigger. It doesn't mean that you put a lot of money. No, you just put money regularly. This is how the people save money. Yes, incredible product. He says, hello, Joker player. Incredible product says, yeah, 50k is money you can live on. Yes, but understand, 100,000 for the first year. Second year, you have what? You have 150. Let's say you make 50. You will make 75%. So what does it mean? You have $225,000 the third year. Then you make let's say 50. So you see how your account become bigger and bigger. And if you are saving more money, 10,000, 15,000 a year to put it in your account becomes bigger and bigger, and then you reach $1 million in a few years. If you reach 1 million in few years, 1 million, if you have 50%, it is $500,000. This is what I am talking about, because the people think that people, they can just 1 year or 2 years they can make millions of dollars. No, this is not true. This is not true. Don't try to push yourself to the extreme where you have false ideas. Everybody else, each one has his own performance. You can change your performance by practicing more, controlling more what you do, having a plan, saving more money. This is how you continue to grow your account. Okay? Joker player says, how you know that your strategies are working for the long term? How you know that your strategies are working for the long term? Yeah, it means the strategies are based on price. It means each time you find stocks that are trending, that have trends. This has happened in the market, even in the market where we have like 2008. If you see 2008, it's not all the market that it was going bad. There are, for example, precious metals like gold, like silver, like platinum, like the other stuff, like copper, they go up. And in these years, I have made a lot of money, okay? In these years where there is a bull in the precious metals. So the market, it's not always going down or going up. You should see the stocks. So we are speaking about stocks. We are not speaking about the whole market, because the whole market, we are not buying indexes like ETF indexes. You buy the index and you sleep. For example, you don't want to do anything. You buy the index and you leave it. For example, Dow Jones. Let's say 1 year, 2 years, 3 years is going up. You just leave it, it's going up, and you make money. Those are investors. They are not swing traders. We work by following the trend. We are not staying all years in the same stocks. Okay, so hope Joker player understand what I'm saying. Thank you very much, Joker. Now Hassan said, compounding eighth wonder of the world that like Einstein discovered. No, see, excuse me, Hassan. I am not speaking about compounding. Now, compounding is that you are making the same thing each year, which is not true in stock market. In stock market, it is not true. It's not always you get 50% per se. Sometimes you get 30, sometimes you get 80, sometimes you get 100, sometimes you get 20, sometimes you get 10, sometimes. So it's different. It's different. So don't make a rule to the performance. There is no rule. The rule is that you are making money. That's it. For me, if each year I'm making money, that is what it counts. How much money is dependent on the stocks that I am in my expertise, and so on. So Hassan said, Kareem, I wish you long life so you become multi-millionaire stock trader. Thank you very much. So the aim is to make money from the market. Either you make millions or you make 5,000 or 10,000 or 500,000 or whatever you make, it means you are making money. For me, there is only one thing. If I ask you the question, you have strategies, you have been trading, either doing day trading, doing swing trading, doing investing. I ask you the same question. Are you making money, or did you make money last year? You say yes. That's it. It's good. You are good. If you need to ameliorate your performance, you can see what's wrong and you can ameliorate more and more and more. It's practice. It's new techniques. It's if you are wrong in something, you redress it. That's the thing that we are doing. And that is the rule. You make money each year. That's it. How much you make, it is depending on a lot of things. Let's say, for example, I bought a stock like the live trade I did. Okay. Let's say I make 59%. Let's say someone in the same stock has made 20%. Someone has made 10%. So it depends. Although we are in the same stock, but our performance is different because our way to do business, our stop loss, our exit plan, everything is different. So incredible product says, let me drink some coffee before we continue. Also, you can make millions by doing other stuff at the same time. You can start business and then put more money into stock market. Yes. You know, see, there are some people who have wrong ideas about business. They think that someone is doing something, he stays doing something, he doesn't do other things. When you have money, you begin to see opportunities in the market or in the real estate. This is the most important thing. Real estate, the stock market. This is the major thing that the people do. Some other, like, for example, like other businesses, they can do other businesses. So when you have money, you begin to see opportunities. But when you are poor, it means you are just having a paycheck to paycheck. Are you going to see opportunities? No. Why? You don't have money. Okay? Your friend, let's say your friend has a business. You don't have a business. You have a pay job. You have a small job. You work, paycheck to paycheck or salary. You have a small money. You are living. Okay, you are okay. No big deal. Your friend has a business. Now, when your friend has a business, he can make another business because he accumulates money to do another business. And his money becomes bigger and bigger and bigger. And you have a salary or you have a paycheck. You always have the same money. Even if it goes a little bit. Because the employer don't give too much money, okay? The employer wants you to give you less money with the same job. Understand that this is business. So who will make more in the future, 10 years, 15 years, 20 years? It's people who have businesses. They grow and they grow, they make more and more and more money. Okay? So understand that when you are making money, it doesn't mean that you should stay in the same thing. For example, someone who has a job, he can do trading stocks, he can do a store online, or he can see on eBay or Amazon, or do affiliate program, or do whatever in order to make money. If he succeeds, it's okay. It means our goal is only to make money. But for me, I am specialized in swing trading in stock market. This is what I do. But other people, they can do other things. Now for me, I can shift to other things when I see opportunities. That's it. Okay? So you should open your mind and try to have ideas, and that's it. So this is all for today. So I will be waiting. If you have another question, please ask. And hope you have some information today. For those who come late, you don't see, you can watch this tomorrow on YouTube. It means when the video is processed, you can just watch it again. If you have any questions, you can okay. For those who don't know, I have begun the silver and golden subscription. Those who don't know, so please check it, and if you are interested, you can check this. Okay, let's take this. Okay, we have what we call silver and golden subscription. This is our new, this is not like the old. So for you guys, Hassan said, for the membership, do you do search daily? No. See, understand the difference first between silver and golden subscription or membership. Silver is for search. You have 4 training levels for free. Training level 1, 2, 3, 4, because all they speak about search. Okay? And then I do a search on Friday. This search is a practice. It is not stock picks. So this is what you should understand, because the people, they are always mistaken. This is not stock picks where you where I give you stocks and you buy. No, this is not the aim. The aim is to practice how to search for the best stocks by yourself. I showed you how, and I will show you what is the best stocks, how to find them, how to select them, what are the best stocks, what are the criteria, what is the signal. All this I explain. I explain everything that you need about search. I will explain, like volume, how to understand volume. Today I have, yesterday I have put 12 lessons about volume. It's so deep information. Okay? Now, if you want the golden, it means I cover all my 18 training levels except for options. But it's going through like month by month. I will put more and more and more material, and anyone can ask me any question about any level, and I will make lessons about that. And I will do the search also, and the 4 training levels are included. So the golden is for those who want to really begin and have, and each time and each month they will have 30, 40, 50 lessons they should study them all, and if they have questions, they ask. So it's different from safer. Okay, thank you, Hassan, and all the people. You can just try if you are interested. You can just try and see if it's good for you, or you can always order training level 1, 2, 3, 4 as individual, and you choose whatever you like. So whatever you want to do. Okay. So thank you very much for watching, and please, if you have any more questions, as always, thank you, Kareem. Good evening, everybody. I enjoy this live chat on Saturdays. Thank you very much, Wiseman, and thank you, all of you who come here, either new guys or my students, and you come here and I share with you all this information. And thank you, incredible product, and Wiseman and Hassan and all the others who participate in this chat. And always, when you ask me more questions, I will give you more and more information. But for those who have my subscription, they can ask me directly, and I can answer them directly from the subscription by making videos, which is very good, because when I explain deep. It means it's not like in YouTube, I explain, but I will not explain in deep, giving you the details of my training. So the details are always Joshua Walker says, Joshua Walker subscribers, please 100. Oh, okay, Joshua, we are not doing subscriber for YouTube. This session is about swing trading. I explain a lot of things about trading. It has nothing to do. Joshua, you are wrong in the live session. You are wrong. Okay, we are not here to subscribe for channels. Okay, so thank you very much. Send me emails if you need help, or if you have a silver or a golden description. Try just to send me questions. Thank you very much, and see you.